So every week Glassnode, the analytics company Glassnode, brings out a newsletter, and the link to that newsletter is also in the video description. In this video, we are going to look at most of the charts presented in the newsletter to kind of get a gauge where Bitcoin might be headed, where it is long term, who's currently buying, who's currently selling, what's the current dynamic and the current momentum. And the newsletter starts off with the circulating supply versus the price. This should be no real surprise, but I think the representation here is a bit misleading. So we see in black the Bitcoin price, right, on a logarithmic scale. So at the lower prices here, we just see cents. And at the higher prices, we see thousands and tens of thousands. So that's the black line, right, since 2010 all the way to today, the Bitcoin price. And then in orange, we see Bitcoin's circulating supply, which at the beginning was quite steep, right? A lot of new Bitcoin got mined. And then every 4 years, the new issuance gets cut in half, which you can also see here in this blue line. So the new supply grows slower and slower. But I think it is a bit misleading to kind of compare these two lines or those two metrics directly in the chart. It would almost imply that the price growth should slow down the slower the new circulating supply gets added to the market. But in fact, it's the exact opposite, right? The less new supply there is, the more the price should go up. Low supply, equal demand equals higher prices. So I think the representation of the supply versus the price is a bit unfortunate over here. But I still think the fundamental idea behind this is important, right? Why do you buy Bitcoin? It's simply because its new supply gets lower and lower. It becomes a more and more rare asset over time, thus outcompeting fiat currencies, regular currencies, because they can just be printed into oblivion, right? Which is not the case for Bitcoin. Now let's look at a accumulation trend score. So that's an invention of Glassnode, trying to find out what are the typically accumulating wallets currently doing. So Glassnode looks at the on-chain data and it looks at what kind of wallets are more short-term wallets, as in they speculate in and out of Bitcoin, and what are the wallets that tend to just buy and hold and that usually do not have any Bitcoin leaving their wallets, where simply the balance is just increasing. And so it looks at these kinds of wallets and looks at what are they currently doing in a certain point in time. And when they are not buying those kinds of wallets, then this trend score is comparatively low, right? And when they are buying, then this is high. So no activity by those accumulating wallets means a rather orange toned line. And if they are buying, then we are here in dark purple. So what's currently happening? We see there was a lot of buying during the 2020 rally, right? And then once this flattened out, also the wallets that typically accumulate, they stopped accumulating. And then when Bitcoin rebounded again, they bought. Now they're starting to somewhat accumulate again. Now I find the connection between price movements and the behavior of those wallets relatively weak. So I can't really see how this is properly predicting future price movements, this particular score. But I still found it important to keep this in this video. It's interesting at least to know what these long-term holders are doing, that they're currently buying. But I wouldn't directly infer from this that Bitcoin has to now moon from here just because of that activity. Now, next, we've got something that I think is very encouraging, and that's the balance on exchanges. So how much Bitcoin is currently held by exchanges? And one way to look at this is when this is pretty high, when this grows, then it means that Bitcoin is mainly used for short-term speculation, right? You can get in and out of Bitcoin relatively quickly. When you then, however, decide to move your Bitcoin off the exchange and to potentially store it in a hardware wallet, right? Store it in a cold place where you can't move it as quickly, where you can't exchange it as quickly as, say, on Coinbase or on Binance, then you tend to be more of a long-term holder, right? You tend to not sell this Bitcoin off quickly. So when this goes down, the way I interpret this is more and more people or more and more Bitcoin is being locked up by people that don't intend to sell them quickly, that simply have them in cold storage, that don't actively speculate with it. So Bitcoin moves from the short-term speculators to the long-term holders, reducing overall supply that's actively traded, right? Which then also pushes up the price once new interest enters the market. And so seeing this recent decline here on the balance of exchanges, I think is a positive thing. This is a long-term trend since the Corona crash, basically. We did see a short-term increase, right? People were panicking here during the crash, but since then, people just bought off the exchange and held it off the exchange, meaning the overall time horizon tends to probably be increasing in the market. Now here's the total balance of Bitcoin in accumulation addresses. So again, we are looking at the addresses that tend to buy, that don't tend to sell. So they're simply just, for example, dollar cost averaging into Bitcoin regularly. And this is what's currently happening. So this chart starts in 2019, where we had our first rally right up to 20K. Then we had our crash. This is the Corona crash, then the 2020 rally, and now our recent sidewards movement. And we do see pretty much a consistent increase, which did then peak though at the beginning of 2021, right? So when the price went sideways, this is also when the accumulation addresses stopped accumulating. But this tends to now change again. We are at an all-time high here again. The total balance in accumulation addresses is higher than it has ever been, which is positive because it means not just does the supply get reduced simply algorithmically, right, where we see Bitcoin's halving is happening, but we also see that the people that buy, they're not starting to suddenly sell. They're also reducing more and more of that supply that could get in by new people, right? So the way to look at this is there are these existing holders. They dry up the supply. There is the algorithmic logic that reduces the supply. And so whenever there is new interest, new people coming in, less and less Bitcoin will be available for these new people, creating potentially new all-time highs for Bitcoin. Now, there are more charts to come. If you so far enjoy this kind of content, don't forget to subscribe because I do publish videos regularly. Now, let's look at who's actually buying here, right? Who's accumulating? How rich are these people? Are these whales? Are these retail? And this is a breakdown of the wallet size, as in, are we looking at 1 to 10 Bitcoin, as in, is this from 50K US to $500,000? Or are we looking at, say, 5K US to 50K US, etc., right? So this is a breakdown from quiet wealthy to somewhat of a position to then maybe just play money, right? So that's how this is built up, and we can see there's pretty much an increase in all of those sizes. But what I find very nice is that the 1 to 10 Bitcoin balance is also growing quite quickly. So it's not a lot of money that's just distributed among very, very small wallets. It's simply those people that have in 50K or more in US dollars in Bitcoin that tend to buy more and more of it. And the same goes for 0.1 Bitcoin to 1 Bitcoin. So the DCAing is happening with relatively substantial amounts, maybe 1,000 US per month, maybe 2,000, 3,000, something like this. And this is then over the years increasing their BTC balance. So this is not just 10 US dollar DCAing that's happening, that's at least moving this supply distribution upwards. It's really people that believe in Bitcoin and that don't just stick with it over the long term, but that also put in quite substantial amounts. And this is different to the supply per whale, right? So what we looked at here was everything up to 10 Bitcoin per wallet. What we are now looking at is 100 to 10,000 Bitcoin. Now, I think there's two different ways to look at this. The first way to look at this is simply that the whales, they already have enough exposure after Bitcoin went up so much. So they're not necessarily interested in putting in more capital. The second way to think about this is maybe there's also some kind of fragmentation happening, right? When Bitcoin doubles, triples, and quadruples, then maybe you don't want to have all of that money in a single wallet again, especially when these wallets are that valuable. So maybe you want to spread your risk somewhat, split this up across wallets, split this up across different custody solutions, and that could then lead to this balance here, right? The supply per whale to somewhat go sideways. Maybe the whales, they still have something like what they had before, but they simply just split it up. It could also be that in the end, people just rebalance their portfolios, right? Very much understandable. If you had at the beginning only 10% of your portfolio in Bitcoin, suddenly half of your money is in Bitcoin, and you still have the same kind of risk tolerance towards crypto, then it doesn't make sense to sell some off, right? I'm not blaming anybody for taking proper risk management measures. Now here's two more interesting charts, and that is the ETF market. So nowadays in Canada, you can buy spot-based ETFs. So ETFs are exchange traded funds. This is a vehicle where you can simply, with your stock account, purchase this asset over here and then get exposure to Bitcoin. Why might you want to do this? There's several reasons, right? First of all, it's very practical. You don't have to have your own hardware wallet. You don't have to take care of all that security. The second point is you can, for example, when you invest in a retirement account, potentially allocate to those ETFs. So this might have tax implications, right? When you save for your retirement, you probably don't have to pay taxes on this, or not as much if you just buy the Bitcoin directly. And so we see increased adoption of these ETFs. The overall holding isn't that high. So I'm now flicking back and forth between them. This is simply a single Canada-based ETF, right? The Purpose Bitcoin ETF holdings. When we go here to the next slide, Purpose is one of those. So that's the delta basically between this orange and this purple line. That's Purpose, but over here we basically see QBTC.U, we see Purpose, and we see BTCQ.U. So 3 different ETFs, and what we can see is there aren't a lot of movements to the down. There's basically a pretty constant growth of these ETF balances, which is good, right? More and more people buy this, more and more people hold this, not a lot of speculation happening. But still, as an overall fraction of Bitcoin supply, this is not yet very significant, right? It's 69,000. That's where we are currently at. The supply of Bitcoin is in the millions, right? 19 million Bitcoin versus 69,000. So this is something that's just starting out. We simply need to give it time. But it does look like, no matter what kind of chart we consider here, that the long-term holders have not lost any conviction in Bitcoin. People still continue to buy. The balance held in accumulation addresses has never been as high. And so it's simply a matter of time, with more and more supply being held by more and more people that don't sell. In the end, it would be no surprise if the price will also reflect this. If you found this data helpful, please share this video with your friends, with anybody who might also be interested in Bitcoin. Maybe post it in your favorite crypto Facebook group or Telegram or Discord. And if you want to know what kind of charts we looked at last time when analyzing Bitcoin, then don't miss the following video. A lot of value is there as well. See you in that video, and thanks for watching this one. Bye-bye.